Hello, welcome to the weekly technical analysis for Monday, January the 28th. I'm Ravi Boyajan, currency analyst at xm.com. Today we're going to be looking at the pound dollar, the Aussie dollar and gold. We're going to start first with pound dollar. We can see that the near-term bias is looking fairly bullish at the moment, though the RSI is pointing downwards, coming off the overbought level, and looking at price action, we can see some easing of the upside momentum. So pound dollar did meet strong resistance at the 1.32 handle, which is around the 200% Fibonacci extension of the down leg from 1.2814 to 1.2424. If we do see the further gains, we could see pound dollar surpassing those tops from back in September and October, and then heading towards the 238.2% Fibonacci extension at 1.3352. Above that, the next target could come at 1.3444, which is the 261.8% Fibonacci extension, and then successfully passing above that level could signal the start of a new longer-term uptrend for pound dollar. To the downside, we're likely to see support coming at 1.3054, that's the 161.8% Fibonacci extension. Below that, we've got the 1.2962 level, that's the 138.2% Fibonacci extension. And then a drop below that, we could see pound dollar, the downside slowing down at just above the 1.28 level. Also worth mentioning that we did see the 20-day moving average crossing above the 50-day moving average, so that does confirm the short-term bullish mode. However, in the medium-term picture, pound dollar is still within its recent sideways range, so unless we see further gains, potentially at least towards the 1.3444 level, the medium-term outlook won't shift decisively to a bullish one. Let's now turn to Aussie dollar. We can see that although there is some upside momentum in the very near term, in the broader picture, it's somewhat neutral. Looking at the MACD, it's near zero, and also the signal line is flat as well. And also the 50-day moving average has been moving sideways since November. So in the medium term and in the short term, Aussie dollar is looking fairly neutral. There is immediate resistance coming from the bottom of the Ichimoku cloud, which is in fact converting to the top of the cloud at the moment. So that's just above the 0.72 handle. So breaking above the 0.72 level, we could see Aussie dollar running towards the 0.73 handle, which is where the 200-day moving average currently lies, and then overcoming that, then the 4 months top of 0.7393 from back in December, so that would come in focus, and then passing that level as well, we could see the start of a new uptrend for Aussie dollar. Until then, the neutral outlook will hold. To the downside, there is immediate support coming from the 50-day moving average around 0.7170, and then below that we've got another potential support zone which is around 0.7145. That's near the 10-count trend line as well as the 20-day moving average. So breaching below that zone, we could then see the 0.6990 level coming into focus. That's the where the Kijun trend line has currently a flat line, and below that we could see the pair heading towards this long-term descending trend line. So at the moment that lies at the 0.69 handle. If we were to see Aussie dollar breaking back below that descending trend line, we could see the resumption of the longer-term downtrend. And our final instrument for today is gold. We can see gold prices did break above the 1,300 level on Friday, and that level is proving a bit of a resistance area. The prices did reach a 7-month high earlier today. If you do see additional gains in the coming days, the next resistance would likely come from the 78.6% Fibonacci extension of the down leg from 1,365.89 to 1,160.03. So that's around 1,322. Above that, the 1,365 level could be the next target, and it would also strengthen the positive medium-term picture. We saw earlier in January that bullish cross between the 50 and 200-day moving average, confirming the shift to positive outlook. In the more near term, we do have also still some bullish momentum, and the MACD, which had been easing up until the end of last week, is also gaining further upside momentum. But if we were to see a downside reversal, the 61.8% Fibonacci retracement could provide some support at 1,287. Further down, the 1,263 level could come into focus, and then further down, even below that, the next support could potentially come at 1,239. So that's it from me. Thank you very much for watching, and have a great day.